Welcome to LMDtv. I'm Andrea Melisa. This week on Talking Business, Anushan Selvarajah speaks with the CEO of Commercial Bank, Sivakrishnarajah Renganathan, to find out what's in store for the banking sector.
Welcome to the show, Renga. Good to have you with us.
Hi, Anshan.
So, how did the banking sector fare during this lockdown period?
Well, before just coming on to the answer to your question immediately, let me also place on record my appreciation to the banking sector, which also faced this unprecedented challenge during the COVID time also. And I must place on record our appreciation that the banking sector was really dynamic, came forward in addition to the government directions and the government leadership given to manage this COVID pandemic, outbreak. Banking sector also came forward, understood the requirement of the banking sector services during this time period. Now, the banks kept some of the branches open during this, challenging period, in spite of some of the lockdown times as well. And also, they realized the need to, provide the services at the doorstep of our customers and came up with mobile banking units and various ways in which they came forward to support them. Digital banking was also provided. In addition to that, those who did not have the digital banking also were given the opportunity to register. So that way, the banking sector really came forward to support as much as possible to reduce any inconvenience to customers and provide them the financial services required.
So, what have you seen in the aftermath now that we've opened up somewhat?
I must place on record that the government also, through the banking community's regulator, Central Bank, came up with relief schemes for those who are affected due to this COVID issue, individuals as well as the business community. They came up with this relief scheme, including an additional working capital funds for them to meet the 2 months lockdown period of requirements. So in that relief scheme also, the banks really actively got involved and took part to support the customers. The moratorium was only the first part of the assistance. If I may say, this is the second part of that we need to look at it to see where the customers are. Some individuals have lost employment probably. Some, their salaries or income has got reduced. So how do we support them is the area that the banks are now focusing on, while also looking at any additional funding requirements of these customers.
But what are the problems that may arise, Renga, while providing this assistance?
Anushan, being a banker, I must say, I always say this, that the banker and the customer should have a full understanding. Whatever the scheme, whatever the intention that we have to support you, if I don't understand exactly what position that you are in, it's very difficult for us to give the right solution to you. So there, what I see is the biggest problem or challenges which we normally face. Here it's a bit more for us to understand the exact scenario under which the particular customer is in at the moment. So if that can be really clearly divulged to the bankers could, work together with the customer to provide the proper assistance. There is certain people have said, they don't need moratorium. They say they have different line of income, so they can meet their requirements. So they can meet the commitment. So, but that is where what I want to say is the exact requirement of the customer, exact position of the customer should be clearly understood by the bankers. Then I think most of these problems would be resolved to a great extent.
Moving on then, what do you perceive as the trends, both globally and locally?
Right. Globally, of course, it's widely believed that the world is moving towards an isolation economy compared to the global economy that we have. So I would say that, globally, I think mostly we expect that the regional trade to be enhanced further after this COVID challenge. At the same time, we feel that, the work culture, the way that we work and the processes and all that also need to be changed. So I think this working from home and various other mode is also coming. Now earlier we had to go for training overseas. Now maybe the overseas training can be brought in here through this virtual media, etc. So overall these are changing. The pandemic has put in strain on the economy globally as well as locally, and the banks are also going through a very, very tough time. But having said all these challenges that we have, this will also enable the banks to really look at innovative ways and coming up with unique banking solutions to our customers. So I expect a lot of new innovative products and services to be launched by the banks, having understood the challenges that we have faced in the past and also the opportunity that we have in the new normal life.
We're going for a short break now. We'll be right back after this. Welcome back to the show as we continue our discussion with the CEO of Commercial Bank, Sivakrishnarajah Renganathan, to find out what's in store for the banking sector. Renga, what steps are the private sector banks taking to mitigate the risk of higher NPLs in this COVID aftermath?
Once again, I would say the same thing, Anushan, because the NPL stress again comes in when we really don't plan ourselves. So, as a business entrepreneur, if that entrepreneur has really evaluated the risk associated with his particular business line, I think when these new challenges comes in, he should have that, what next action that should be done. So he should be able to go on the plan B or C. So that way, the NPL stress is something that the banks and the customers have to get together and plan and manage it. So in that way, I must say the banks are also more flexible. Banks have come up with this type of moratorium in the government scheme, and I must place on record that the more than the scheme that the central bank has launched, the banking fraternity in Sri Lanka has come forward to support even the others who are affected. So they are not strictly going by the government scheme that has been launched, but we are looking at others also. If you take every bank, I know I don't want to go into the numbers, but even our bank, I would say, if I had given X amount of facilities under moratorium, under the central bank scheme, I've also given similar amount of X to others who may not strictly qualify under that moratorium scheme. So that is one side. As I said, moratorium is one part of it. Now we are all working on the second part of it, how they can come back with the repayment arrangements. So in that also, commercial bank has also come forward with a payment relief schemes. We have about more to 4 to 5 types of schemes looking at the different types of borrowers. So whether it's an individual borrower, retail borrower, or a SME or a corporate borrower, and also looking at their present scenario, we have given various options under those schemes. Pick up the right one. For example, someone who has lost employment, we don't expect within the 6 months to find another job. So we are prepared to extend the moratorium for a further 6 months period. Someone who has got a lower salary, we are coming up with different flexible repayment arrangements. So those are things that the banks are now working on. Then also you are aware that the government initiative to reduce the interest rate is another way in which government was supporting the industry to revive and come back, or industries or even the individuals. So there again the banks have got together and reduce interest rates. I must place on record, even our bank, if you take from January to today, we have reduced the interest rates even up to 4 to 5% for certain schemes. Now the banks, we were one of the first banks who came up with a 8% working capital facilities by borrowing from a international development financial institution, IFC. So similarly, the other banks also come up with various schemes. So we have also come up with another low-cost scheme for the microfinance borrowers. So plus different ways, digital services are being provided without any charges. Various commissions and fee incomes have been now dropped. We are not charging it. We have decided up to September we won't charge. And various other ways in which we are looking at the individual customer's position and trying to support them.
Now you just mentioned tying up with the IFC. Now how is that association or partnership going to help out the SME sector? Could you just go into some details, please?
Right. IFC has a very specific objective to support the SME sectors as well, and mainly they also look at the women SME. So this year the commercial bank has decided to partner with IFC to enhance our engagement with women SMEs. So in that we don't look at only the lending side of it. We are looking at the overall financial requirements of the women SMEs, and we are working towards it there. So in that respect, when this particular COVID challenge came, we reached out to IFC to see whether there is any emergency funding assistance that could be given. We have a very close relationship with IFC since 2003, I must mention. And at various stages, they have supported us in different ways. So with that assistance, we were able to, they came forward during this COVID time also to support us with this $50 million package with specific focus on export sector and women SME, plus of course, if the funds are available, we will also look at the other sectors and non-women SME also. So with that intention, we have now come up with the borrowing at a reasonable rate. So therefore, we are in a position to give these funds at lower rate, and we have decided to give it at 8% rate.
Now, Renga, as you said, yes, the government has stepped in to provide support to the banking sector in order to support our citizenry. But in your opinion, what more would you like to see as far as policies are concerned to aid in this recovery?
As a banker, I personally feel we should not run to the government every time when we have a problem. We have banking sector separately, the public, the people who are involved in the risk-taking into entrepreneurship are different. And the individuals who are borrowed also has their own plans, and we do. Every time we go to run to the government and push them to do this and that is difficult. But when it comes to certain policy decisions, yes, we could ask them to look into that. I think in that way, up to now, the regulator and the government has looked into various areas. You are aware of policy rate cuts, SRR reduction, and various other monetary instruments are being used at the moment. So I think they are fully focused on that in that area, and they are doing what they should do. So now we should not really continuously bother them to, really give us more and more assistance. We should manage it ourselves. When my advice is when a business entrepreneur started a business, they have come up with the understanding of the risk associated. COVID is totally unprecedented. So the government has come up with various relief packages. Let us manage with that and let us talk to each other, the banks and the customer, and take forward what we can do. So I think there is certain amount of policy, support has been already provided. There are a few more areas where they can also look at it, but I feel they have done enough. Now it is our turn to not continuously bombard them with complaints and saying that this is not done, this is not done, this is what we want. Let us also take our own initiative to come out of this and reduce their burden. They have much bigger issues to tackle.
So as a final question then, Renga, how do you see the banking sector performing over the rest of the year, let's say?
Yeah, banking sector will continue to have these challenges. As I said, the banking sector's NPL stress will continue because now that the moratorium period is over, if a borrower doesn't plan a realistic repayment arrangement, again, they are going to get into difficulties of moving to non-performing. So they need to have a serious thought on their business model changes and how they are going to really service their advances after the moratorium now is being over. Then the second thing is banking sector has given various concessions, as I mentioned, on fees and various other tariffs that we have been collecting, so which is affecting us. The import reduction is also affecting us. Exports getting reduced also affecting us on the fee income side. So overall, the banking sector will have a challenge in maintaining their earnings, definitely. The impairments going up, etc. and all that. Earnings will be one challenge. Then the second thing is about maintaining the capital. With the earnings getting reduced, the capital management will become another challenge for the banks. So the banks need to look at the capital adequacy levels and see how best they can improve that. Then again, liquidity may become an issue for some banks, but with the policy changes, regulators have come forward. I think to a great extent that problem is sorted out. So in the next 6 months time period, we expect that the NPL stress, the earnings being affected in a certain amount, and on the other side, capital adequacy need to be maintained by certain banks, which need to take certain initiatives towards that. And of course, definitely banks will focus more in reducing the cost and try to manage these challenges with that type of cost efficiency, etc. That's my fear.
Well, let's hope that the recovery comes through fast and the banking sector will play a pivotal role in this. Thank you very much for joining us, Renga. It was a great pleasure.
Thank you, Anushan, and thanks to LMD for requesting me to take part in this. Thank you. Thanks.
After a short break, Andrea Melisa will be back with a recap of the month's news. Stay tuned.
Welcome back to the show. I'm Andrea Melisa and this is the monthly news roundup. Sri Lanka is one of the very few countries that have shown a comparatively greater degree of resilience in the face of the COVID-19 pandemic. Over 2,000 cases have been reported in the country. Close to 400 patients are currently under medical care, while 1,600 plus patients have recovered so far. The World Bank Board of Executive Directors has approved additional financing for Sri Lanka's COVID-19 emergency response and health systems preparedness project. While this project will help boost Sri Lanka's capacity to prevent, detect and respond to the threats posed by COVID-19, the additional financing will take care of the temporary cash transfers to high-risk populations to enable them to stay at home as a preventive measure against the spread of the virus. With regards to tourism, while the reopening date for tourist arrivals had been tentatively scheduled for August, the Ministry of Foreign Affairs conveys that it is highly unlikely that the whole country would be open for tourists all at once. Moreover, all Sri Lankans overseas who wish to return will be repatriated before the airport is opened for tourists. And the UNDP, or the United Nations Development Programme, is working closely with government agencies to build a more resilient and safe tourism industry. In terms of the general economy, the Ceylon Chamber of Commerce recently issued a statement that to achieve an accelerated economic recovery, Sri Lanka would have to double down on domestic production, narrow the trade deficit, strengthen fiscal and monetary discipline, improve competitiveness in the global market, and maintain macro stability. In this regard, the Chamber calls for the recommitment of the government, empowerment and upskilling of civil service, and public-private partnerships to spur the nation's economic revival. The export sector, on the other hand, is witnessing a strong recovery, according to the Export Development Board, While almost all export categories have fared well, apparel and tea are among those that have recorded a substantial decline. In other news, on a global scale, the IMF predicts a deeper global recession due to COVID-19. The 2020 global output is expected to shrink by 4.9%, and recovery in 2021 is likely to be weaker. Sri Lanka has been ranked as the #2 global ecosystem for affordable talent in 2020 in the Global Startup Ecosystem Report, or the GSER, launched by Startup Genome and the Global Entrepreneurship Network. The GSER is the world's most comprehensive research on startups, and the 2020 report, which surveyed over 250 startup ecosystems, cites the Sri Lankan government's support for tech companies as well as competitive tech talent as reasons why a startup should move to Sri Lanka. That's all the news we have for you today. Don't forget to subscribe to our YouTube channel and follow us on Facebook for a regular dose of news and events. Take care and stay safe.